Welcome to a new update, and today we're going to discuss the Bitcoin Wyckoff structure, as that is the only thing people are focused on right now. And we're not only going to discuss Wyckoff, we're also going to discuss on-chain analysis with some very interesting data that I'd rather want to focus on rather than news outlets providing some news that you can't even prove whether it's true or false. Let's get to the charts, but before that, do not forget to subscribe beneath and also like this YouTube update if you enjoy the content, and comment if you want to see some special content in general. So, the Wyckoff structure, and I've painted it here. We've got two levels or two constructions that we are having, or we need to discuss here. First one is the entire upwards momentum that we had during April and March, which was also a range construction and failed to hold on as support. And since then we've got this second sideways construction between 28.5 to 41k. That is very similar to a Wyckoff accumulation phase. As the accumulation phase of Wyckoff shows this entire structure in which we've got different phases, right? So we've got this breakdown that we just witnessed. We've got some sideways action in which we test all the levels. We got a spring which actually fails to succeed, falling downwards even more. And after that we continue the sideways action or the grind upwards, and the structure is bottoming out. But in order to argue whether something is bottoming out or not, you have to focus on data. So you have to focus on-chain analysis, as those are providing you information about the markets. One of those things is the Chinese miners are shutting down, and because of that, miners have to sell their supply. That's not true. The supply or the on-chain analysis show that the miners are not selling. Yes, they had to quit in China, but they are not the ones selling. So you have to look at multiple data points in order to fragment or make an analysis or an educated guess that where the market is standing at this point. So Wyckoff is currently showing this structure, but we'll get to the TA point in a little bit. Before that, I'd like to discuss some on-chain analysis. And one of them is the Pew multiple, which is the daily coin issuance divided by the MA365 times the daily coin issuance. What it shows is that in the green area, the value is relatively low of this Pew multiple, and in the red zone is relatively high, or at least in those higher zones it's quite high compared to the valuations that are on the lows. What it shows is that the green zone is where the bear market is, or where the market started to bottom out or get into the lower time frame or the lower zones. 2011, we see that the market crashed heavily, and Pew multiple came into this zone. 2014, 2015, the longer bear market and sideways accumulation range, we see that the Pew multiple has been acting there. 2019, the actual crash from 6 to 3k in the sideways construction there, we see the Pew multiple acting there. And finally, during March, we also see that the Pew multiple was there, but even before the crash, it came already into the green zone. And now for the fifth time, we are back into that area of structure, meaning that we can still fall to 25k. We'll discuss why that could be a possibility in a little bit, but it is an area where you want to start looking for longs rather than looking for shorts, because it's a crash of more than 50% in the markets. That's not the area where you want to short. That's the area where you want to start looking for some longs in general. Then another one, which is you've got short-term holders and you've got long-term holders. Usually what you see is that short-term holders are buying into the run upwards. So that's the speculative FOMOing group of people that always want to pursue or become a millionaire within a few months. But in this case, you can see that that's always happening. So in 2017, we see that the short-term holders were increasing heavily during the run. In 2013, 2014 you will see it, and in the last run you can also see that while the long-term holders supply decreased heavily in the run upwards, the short-term holders were increasing significantly as they are buying into the markets at this stage. So what we see in the recent crash of the markets, we see that the long-term supply is increasing heavily. What does it tell us? It tells us that long-term holders are buying back in. They are accumulating, which is similar to what we have been seeing during the entire 2018 bear market, but also during the bear market of 2014, 2015. It's not a signal that we're bottoming out, but it's a signal that you want to see that the long-term holders are accumulating once again, because that's the play that you're looking for as well. You're not eager to buy at 55k, you're eager to buy when nobody is interested, exactly what the long-term holders are doing right now. So then the stock to flow deflection model, everybody knows the stock to flow model. The stock to flow deflection model shows us the best option to buy Bitcoin at this stage is, or in the past 10 years, is now. The valuation of the stock to flow compared to the current price of Bitcoin is at its lowest point. So it means that it's very undervalued, meaning that right now it's a great opportunity to buy Bitcoin in general. The counter argument is that the stock to flow model is not working anymore, it's invalid, and then you can erase this entire content. But if you compare it to the rest of the on-chain analysis, this is granting you another additional argument to buy Bitcoin at those levels that we have here. Next to that, we've got the NVT from Bitvavo as well. Then we've got the funding rates. During the period of the corona crash or the pandemic crash, we had negative funding rates and heavily negative funding rates. As you can see here in the structure, during the entire consolidation, people really wanted to short the markets because they expected only downwards prices. Right now we can see that people are eager to short the markets again after the crash because they're only expecting lower prices to happen. Altcoin season or alt season will start when nobody expects the market to run upwards. So if you want to make that big gain, you have to buy when nobody is interested, similar to what we see with the funding rates at this stage. Then we've got what we just discussed with the long-term holders. What we see here is exactly what I just discussed. It is the long-term holders or the strong hands, those have been accumulating while price has been dropping down, a bullish divergence, whatever you want to call it. But this is another visualization of the fact that long-term holders are buying right now, while short-term holders are capitulating, and those have been selling into the long-term holders. Getting back to the Wyckoff structure, we know that we've got a sideways range. So Wyckoff is just an accumulation range or a distribution range. So when we get to the chart of the period that we ran to 65k, we've got this failed breakout above the range during that period. Usually what will happen after such a period is that you drop back into the range and test the other side of the range, which we did. After that, the resistance zone that we couldn't crack through in the beginning, we retest here again for resistance, as in we are making a lower high after a lower low, as it invalidates the structure. So this is a lower high, and then the market starts to fall down, which is comparable to a Wyckoff structure in general, but this is literally what's just been happening. Now the price came into a very big support zone once again, and since then we're testing levels. So we can see that based on the price action, 41k is a very critical level that we have to break until 42. The price of Bitcoin rejected there and starts to act sideways. So then you get a comparable Wyckoff structure because of those levels that are being tested and the sideways range that is being used here. So what do you want to see right now? Well, the spring might have happened. And you don't have to expect Wyckoff to critically be the exact same as the picture is showing. It's usually something compared to that actual picture, and it's because levels are being tested. So what I mean by that is, we do see this run up, but we clearly have been rejected at 41k. After that, price has been dropping down and testing levels downwards. and the recent support around 30k couldn't be providing support, so the price started to fall down. However, what you want to see then is a heavy capitulation, which we know it's one of the biggest we have experienced, and in which the price immediately bounced back. Because if this bounce back didn't happen, we would be trading at 20k at this stage. Because buyers didn't step in, so you're looking at the next level at 24k, which at this stage was avoided by this big bounce back and the heavy volume that was inside that candle. After that, we reject level again, test lower levels. You might argue that this is a retest of these higher lows or the higher support levels. We make a higher low, we bounce back further upwards, and right now, in order to complete our Wyckoff structure, you want to continue making higher lows. So you want to flip back into the range, as these are the support levels that we are constructing here, in which 33k becomes that support, and then we can start testing 38 and 41. And then you get the final part of the Wyckoff structure. What is the critical level that I'm looking at right now is that we sustain 33. Preferably, as I tweeted earlier today, you want to see it sustain above 35, given the fact that that's a daily level. But we have to see whether we can continue this momentum, so that you can also make this structure in a way that we're going to look at 38k first and then reject, come back down to 33 and then continue the momentum. All in all, 33k is for me the critical level. So that is what I'm looking at right now, and after that we can start testing those range highs. And you can argue that given the fact that we discussed the fake out on the upside, we've also got a fake out on the downside. So it's very likely that we just continue towards the other side of the range. So we hold 33k and then we continue grinding to the other side of the range. And then the question becomes whether we can flip critical levels for support in order to sustain further upwards momentum, and then we can just continue pushing and pushing. So we've avoided a breakdown of this range. Most likely the other side of the range is going to be tested, and most likely 33 is going to be the critical level, because if 33 the buyers are not stepping in there, I think we're going to fall back down again and continue the lower highs that we are making. So is Wyckoff a very valid structure that you should be looking at? Yes, but rather being focused on the picture and the structure of the prices being made there, you should be realizing what's actually happening in the price of Bitcoin or in any asset that you're trading. So I think that we're getting close to the bottoming structure of Bitcoin, in which the on-chain analysis are showing that, and in which the price itself shows it too. So the likelihood of Bitcoin going to 42k is significant. Wyckoff is also a very significant structure that you could be looking at if you understand the price action. If you want to learn more, if you want to follow my strategy, do not forget to check out my website, where you can become part of our platform. We are rebranding quite soon, and we're opening up the consultancies too, so do not forget to check out the website and do not forget to subscribe. I'll see you again tomorrow.